It's time now for a check of some of the day's business news stories. Cole Stangler is here with me. Hi there, Cole.
Hey, Tom.
Now, let's begin here in France because the authorities here are heavily courting the financial sector. And of course, all of this comes post-Brexit. Tell us more.
Yeah, so this has been a goal for some time, and sort of this dream of making Paris the new financial hub of Europe. Authorities say they're making progress on just that. Today, President Emmanuel Macron paying a visit to JP Morgan's new headquarters in Paris, just a stone's throw from the Louvre. Alongside CEO Jamie Dimon, he touted the creation of some 3,000 financial sector jobs in recent years. A share of those are from JP Morgan, but they also come from Morgan Stanley and Goldman Sachs. Then later in the day, Finance Minister Bruno Le Maire made a new pledge vowing to create another 3,000 jobs in the sector by the end of next year. At an event in Paris, Le Maire said, quote, Brexit has been a major setback for the EU, but it has been an opportunity as well. Let's take a look now at some of the day's trading action. Looking at Wall Street, where we're seeing shares really hang around the flat line as concerns over the Delta variant weigh on investors. You can see they're pretty muted today so far. On the other hand, U.S. consumer confidence this month hit its highest level since the pandemic began. Tech-heavy NASDAQ, they were the only one with some serious gains there, up around 0.1%. That's where Facebook is listed. Its shares in negative territory today, down around 1%. It's after it hit a milestone yesterday, closing above the $1 trillion market capitalization threshold for the first time ever. Big reason why the firm finally joined the $1 trillion club is that 2 antitrust complaints against it were dismissed in the U.S. yesterday. A federal judge threw out cases brought by federal regulators and a coalition of states. Erin Agunkaye has more.
A major blow for U.S. regulators' attempts to rein in big technology companies. A federal judge dismissed an antitrust lawsuit from the Federal Trade Commission against Facebook, arguing prosecutors did not demonstrate the social media giant holds monopoly power.
These allegations, which do not even provide an estimated actual figure or range for Facebook's market share at any point over the past 10 years, ultimately fall short of plausibly establishing that Facebook holds market power.
The FTC had accused Facebook of attempting to stamp out competition from rivals when it acquired Instagram in 2012 and WhatsApp 2 years later. The federal agency was pushing for a forced breakup of the 3 platforms. In a second setback for regulators, the district judge also tossed a similar case by a coalition of states, considering the violations of competition law they claimed took place happened too long ago. Facebook welcomed the decision.
We're pleased that today's decisions recognize the defects in the government complaints filed against Facebook. We compete fairly every day to earn people's time and attention.
But the failed lawsuits aren't necessarily the end of the road for the FTC's push to curb the power of big tech companies. It has 30 days to file a new lawsuit correcting the weaknesses of the first one by scrutinizing Facebook's acquisition of Instagram and WhatsApp.
Next up, the EU is calling on states to provide financial support to suffering cultural institutions, encouraging them to turn to the bloc's new recovery fund. EU commissioners drew attention to the depth of the crisis. It's seen an 80% drop in revenue for museums in highly trafficked regions. But they also urged governments to adopt what they called a safe reopening of museums, movie theaters, and concert venues.
We have seen enthusiasm among the public for this throughout Europe, and it's this enthusiasm that shows us once again just how important the cultural and creative sector is in Europe. It is, after all, part of our European DNA. In order for Europe to regain its status as a global cultural power, the sectors need coordinated, tailor-made efforts throughout Europe so that they can reopen safely, but also sustainably.
Meanwhile, one of the most high-profile guests at the Mobile World Congress has taken the floor. While not in person in Barcelona, Tesla CEO Elon Musk gave a virtual update on his venture known as Starlink, a satellite internet business aimed at offering high-speed connectivity to hard-to-reach parts of the globe. While some doubt the project will ever receive the upfront investment it needs to flourish, Musk says he's ready to pour a lot of money into it, up to $30 billion over time.
You can think of Starlink as filling in the gaps between 5G and fiber. And and really getting to the parts of the world that are the hardest to reach, the most difficult to reach, 3%, possibly 5%. And I think it really quite nicely complements fiber and 5G.
Now to Lebanon, where the crisis continues to deepen. On Tuesday, authorities officially hiked fuel prices by more than 30%, removing subsidies in a bid to reduce the strain on state coffers. That comes on top of crippling inflation and a steep currency devaluation. Mario Sofos reports.
As the Lebanese people grapple with an economic crisis that the World Bank has dubbed the worst since the mid-19th century, the government hiked fuel prices by more than 35% on Tuesday. The aim to relieve pressure on the country's currency reserves, while also easing massive fuel shortages that for weeks have seen crowds queuing up at petrol stations, with scuffles between motorists commonplace.
I'm not thinking about whether the price rises or not. I have a family, we rent, we have 1,000 things to pay for. Pretty soon, people will be killing each other for fuel.
They increase the prices and the lines increase. Something's wrong with this country.
Fuel importers blame the drastic shortages on the central bank's delay in opening credit lines to fund imports due to an exhaustion of Lebanon's foreign currency reserves. The country's deep economic crisis has forced the government to rely on these reserves, which have dropped dangerously low from $30 billion at the start of the crisis to nearly $15 billion currently. In less than 2 years, the economic collapse has sunk the Lebanese currency by more than 90%. The fuel hikes come the same week that a sharp currency devaluation brought angry protesters out onto the streets. The Lebanese pound has been officially pegged to the dollar at £1,507 since 1997. On Saturday, it traded at up to £17,500 to the dollar on the black market, an all-time low.
United Airlines has filed the biggest plane order in its history. Covers 270 jets from Airbus and Boeing at a list price of $35 billion, though airlines often pay less than the official price. While air travel continues to lag behind pre-pandemic levels, the carrier is painting the order as a sign of faith in the recovery. United also says that it plans to add some 25,000 jobs by 2026. And finally, while cryptocurrency regulations may be tightening in China and in the UK, the platforms for exchanging it are continuing to become more and more mainstream. Crypto.com, which bills itself as the world's fastest growing crypto app, has linked a partnership with Formula One. You'll see the firm advertise at races and introduce a new prize at the Belgian Grand Prix in August. While details were not public, the 5-year deal is reportedly worth more than $100 million. Thomas signed that despite some of the regulatory uncertainty we're seeing around crypto. Major brands apparently have no problems, no qualms doing deals like this.
Certainly seems like it. A growing phenomenon, one that looks like it's probably set to stick around for a while. Thank you so much, Cole Stengler. Thank you for bringing us up to speed. That's it from me. I'll be back in 4.5 minutes. Stay tuned.